Welcome back. You're still watching Smart Money on CNBC-TV18. We're here speaking to the MD and CEO of Edelweiss Asset Management, Radhika Gupta, and we're talking about how to plan for our children and invest for their future. Radhika, before the break, you were telling us about how this, multi-cap combo index fund, so a group of index funds together, is something that you can create for your child and perhaps prepare better for his future. Tell us a little bit more about it. What is the combination that I need to have, different scenarios, and what are the kind of returns I can generate?
Sure. So let me walk you through the components, because I really believe the combination is something that you can customize, and in our presentations we've given options for combo. So the first part of the component is the next 50. Now that's an index everyone is familiar with. After the Nifty, which is the top 50, it is the next 50 companies in India, the next 50 largest companies. So you're really benefiting from leaders there. That's what I call your anchor in your safety. The next component is a mid-cap component. It is your mid-cap of the 150 universe of mid-cap. It's the 50 companies that are showing momentum, price momentum, so that are sort of really doing well. So it's the Nifty 150 momentum index. And then you have the small cap 250 index, which is the collection of small cap companies. So that is the combination. I think for a conservative investor, you could do 50 in the next, 50 and 25, 25 in the other two. You could also do 40, 30, 30. And if you want to skew it more towards mid and small cap, perhaps you can do 25 and split in the other two. So you can really make your own combination of indices. As I said, I think when you look at the combined basket, the drawdowns are very comparable to your market-based indices or your active funds, but the returns tend to be, I think, about 1 to 2% higher on a compounded basis.
Over the long term.
Over the long term, which is meaningful. I mean, again, you're investing for a long-term period. And remember, this is without an uncertainty factor, and this is with very moderate costs. So the other benefit of this index fund combination for parents is that it is a very low-cost thing, and low costs matter over a long period.
Absolutely. Have you noticed that a higher percentage of small caps and mid caps in your combo fund will give you better returns over the longer term?
They will, and they will give you, the mid-cap momentum index fund, for instance, is a high return combination. It beats most mid-cap funds in any case without too much drawdown. So adding mid and small cap definitely will add that juice, but that's the choice of the parent as to how much risk they can take or want to take for the child.
A lot of parents and people in general are confused about whether to go in for ETFs or index funds, right? Just clear the air here, and what is it that parents should do for their children?
Okay, so I tend to be a little biased in terms of index funds, and I'll tell you the reasons. I think ETFs are great instruments, but they're meant for traders. I think when you're investing for your children, you are not a trader. You're really investing for the long term. ETFs and index funds are both tracking the same underlying indices. So I could have a small cap ETF, I could have a small cap index fund. Both are replicating the returns of the small cap index, giving you exposure to the best 250 small cap companies. ETFs work like a stock. You need a demat account and you can trade them. Index funds work like a mutual fund. You have the entire mutual fund structure. You can do an SIP, etc. I think for parents, the need to not have a demat account, the need to worry about calling a broker, trading, etc., and the ability to do an SIP also, which is very powerful for children. Index fund format works better for most people.
Okay, so index funds over ETFs any day, right? We also talk about how to plan for your education of your child post 18.
Yeah.
So how do you decide which mutual fund or which index fund outperforms up until then? I mean, it's a long time period that we're looking at.
And that is why, I think that you almost can't figure out what will outperform in 18 years. If you were to ask me what category is going to outperform in 18 years, if you were going to ask me which AMC is going to outperform, which scheme is, it is very hard to guess. I mean, look back 18 years, the mutual fund industry has changed colors completely in terms of what's on offer. And, forget 18 years. In 5 years, we see that the best performing scheme of the last 5 years is nowhere today. So why get into that guesswork? That's why the case for passive funds. I mean, I personally invest in active funds for myself, but for my child over 18 years, Do I want that uncertainty factor? Can I take that bet? Probably no.
And do you take stock of your child's portfolio every 5 years? Because a lot changes, right? Sometimes you bet on a person, you bet on the fund manager, you bet on the group.
Yeah.
But things change over a period of a decade or so. So when do you take stock?
I think you should take stock of your child's portfolio every 3-4 years. As your child is perhaps going to college, getting older, the need for cash flow probably increases. So it also depends on what you're building that portfolio for. But the child's need in terms of wanting to withdraw from that corpus could increase. So if your child is 13 or 14, maybe you take stock of the portfolio then, make your portfolio a little more conservative, plan for education when he is 18 or 19 and 21, add a little bit of fixed income. Maybe you can add a 4-5 year target maturity fund so that when he's 18, you have a certain corpus in hand. I think the first 10-12 years when you don't need the corpus are ones to really build the corpus.
And what about gold? Sovereign gold bonds, gold ETFs, anything like that you would add in your child's portfolio?
I would not do it simply because over 18 years, I think equity outperforms as an asset class. So I don't need the hedge against inflation that gold solves the purpose for.
Okay, so now we're going to do a quick rapid fire on not just parenting, investment advice in general. I know none of us are experts here. We're just learning along the way.
Least of all me after a 4 months old. So I'm no one to give anybody advice. I'm a taker of advice.
Actually, I'm a bit more mature mom
Exactly.
compared to you. So maybe I should be
Exactly.
throwing
You should
the
be giving
advice
me
at
advice.
you. But the only advice is that there's no advice.
Correct.
Okay, so let's do a quick rapid fire, right? Let's start with that. One investment advice that you would give new moms or dads.
Investment advice, I think more money advice, Sonia, I would say. Teach your children to value money.
Okay, well, it's hard for adults to value money.
It's hard for adults to value money, but it's really hard for kids to value money. And I think the earlier you can instill that in today's India, the better.
Okay, what's the one investment mistake you would avoid?
What's the one investment mistake? Doing very complicated things, especially for a children's portfolio. Really, you can get away by being very simple. And the second thing I would do is avoid being very late.
Okay, start early.
Start early.
All right. That's my next question. What's the best time for parents to start investing?
Now, literally now. Do it as soon as your child is born, get the setup done and get started. And as they grow up, start talking to them about it.
Okay, 3 top mutual funds that you would advise for your children.
So I would do, a large and mid-cap index fund, which I've talked about. I would add some flavor of, small cap and mid cap. And if your child is going to study abroad, I would definitely add an international portion.
Okay. And how much should the international portion be?
I think you have to work out the rupee corpus. So if you can try to work out the cost of education, you should try and cover some part of it in international. Okay. Now, education is expensive, so you may not be able to do a lot, but it could be a meaningful portion, could be 25-30% also.
Okay, all right. Given the way the rupee is
going.
Yeah,
so I mean, US dollar fund.
Okay, and finally, your biggest learning as a new parent?
My biggest learning as a new parent is that two. One is that you shouldn't be so harsh on yourself. I think moms tend to be very, very harsh on yourself. And one of the things my mother told me is that no mom is ever going to do anything bad for her child. No mom goes out there to be a bad mom. So remember when your child smiles that you're not a bad parent. So don't have guilt. And secondly, I think children role model the behavior they see in adults. It's the same learning I've had as a CEO. So be the parent you want your child to be the human being you want your child to be the leader you want your team to be.
And enjoy the ride.
And enjoy the ride. Right. It goes by very quickly.
Radhika, always a pleasure speaking with you across topics, across sectors, and now with this new role, I wish you all the very best. Thanks so much for being a part of our Children's Day special on Smart Money.
Thank you and happy Children's Day.
Well, with that, it is curtains down on another special edition. Keep writing to us. We love receiving feedback. Until we meet again, stay safe.